Hi there. Okay, so it's really noisy here. They're building a house next door, so there's a lot of building and music and whatnot going on. So my apologies for that. Looking forward to getting out of here and moving into our house where there's no noise. That'll be really good. Okay, so I just wanted to run through the buy and sell zones algo and just explain the changes, just so that you know what to expect when you start testing it. Okay, and so the algo it's quite different than the other one. Sorry, it's the same algo, but there's a new enhancement. So I'll just show you how to enable that. So if you go here into the settings, and everything is the same, more or less. But if you go down here, there's a setting called enable release mode. And release mode is when it's set to false, it'll do the exact same thing as it did prior to this update. If you set it to true, then it will do things differently. Okay, and the difference between this version and the previous version is that what it's looking for, instead of, if I use this as an example, this is a really good example. Instead of the robot putting a limit order to buy here, to buy here, it will buy at market once this candle just here closes, based on the current configuration. Okay, so if we go back to the configuration, you can see here that we have this. Wait, where is it? Where is it? Come on. Sorry. Wrong thing. Here. Okay, so what it's doing is it's looking for a risk-to-reward ratio of 1 and price and balance release period of 1. So these are set to 1. And this is going to get it in as early as possible. Because if you wait for example, 2, well, then it's going to wait to get in when this candle closes. This one here. But if it's on 1, it's going to get in here. Okay, because essentially it's just looking for the completion of a pattern. And kind of the bare bones pattern is a 1-to-1. And I like that. So far, so good. It's been doing really well. And so it's going to be doing that. So instead of putting the order in here, it's going to put the order in here. When this candle closes, it's just gonna buy at market. Okay. Okay, so that's what it's doing. If we just have a quick look at the results, the picture I sent in the forum earlier was wrong. I was not including some of the other trades that it took. I think I included it from, maybe it was here or around here, and I forgot these. So now these are in there. Okay, so this was the first trade, and this is what it looks like thus far. And there were some trades that were open that I didn't like, and so I built filters to keep it out of trades like that. And essentially the trades that I didn't like were trades like, if we look at the pound, because this is the one. Look at the pound American dollar, which is one of the ones it kept getting into. It would have worked anyway, but I didn't like it. It was buying here. Okay, it was buying right here. So the stop was here, about here, and the entry was here when this one closed. And I was a bit like, bugger. So I'd shut it out, then it would open it again. So I had to switch it off. Okay, and I mean, I don't like that. That's a really bad idea. Even though it was a bad idea, it still would have gone like a risk to reward 1 to 0.5. But still, it's not a good idea. I mean, you don't want to buy when price has done that. Essentially, you want to get the ones where price just like pops out, and then you get in right here. But when we have a huge run like this, I mean, that's not a very good idea. And so what I've done now is that I've capped it so that it will not get into trades where the daily average range is surpassed. So it's not going to continue to buy now. It kind of figures, well, we've already gone too far, we're going to wait. Okay, and then it'll look for pullbacks as price rebalances. Okay, another thing that it's doing now is that it's focusing on the high volume times of day. And I've got a setting here. Here, high liquidity settings. This is set to true. And this means, I gotta open this, that it's gonna start looking for trades at, where are you? There. At 10 o'clock, my broker time, which is in about 1 hour, which makes that GMT 800 hours. That's 8 o'clock in the morning GMT. Okay, and that window closes about 10 hours later, because essentially that's probably around the time that the North American market starts to go home and shut down. And so, I mean, this is a momentum entry algorithm in this configuration, and so it doesn't make sense continuing to buy at the end of the day, where there's likely going to be insufficient pressure to continue to drive prices higher or lower. And so what it's doing now, it's keeping it out of that. Okay, so it's waiting. It's only taking symbols where the range for the day has not been surpassed, and it's only allowing it to trade during the highly liquid times of the day. So during the European and the North American session. It's not trading during Asia, because Asia is not known for those huge moves. Okay, and so what I want us to do is, if you guys could just keep an eye on it, let it run, kind of fiddle with the parameters. And I've kind of left it to here. I mean, I have the stop multiplier is 1.8, and so in this configuration, what it's going to do is, this is the area like that. It's going to take 1.8 the size of this, which is about right there. So this is where the stop's going to go. The entry is going to be here, and the target is going to be 1.7 times the size of this whole block, okay, which puts it further higher. Okay, that's why we have the risk reward. That's when the configuration is set to buy using buy limits, not buy at market, which is the current configuration. Okay, and so so that's what we have there. I hope that makes sense. It's doing awfully good. You can see here, these are the trades that I didn't like that it took yesterday. Sorry, at the end of last week. And if we look at the data here, let me try and, where is that? Let me get the rectangle on this so you can see everything. And it looks like this. So we have, the best one, average profit trade is about $4. Average loss trade is just under $3. So that's pretty decent. Consecutive wins, 3. Consecutive losses, 2. That's really good. I like that a lot. We have short positions 1, 69%. Long positions 1, 64%. That's amazing. That's absolutely amazing. But keep in mind, there is a fair deal of discretion when I'm not just. It's not so far it's not a set and forget situation. I mean, if we look at some of these, I'm just taking the trades off at logical areas. I took this one off here because we're at the upper edge of this sideways price movement. The price kept going. That happens a lot, actually. It happens an awful lot. It keeps going, but sometimes it comes down. And so we could try to allow it to trade without fiddling, and then see how that goes. And there was another one here, the pound American dollar. See this one? This one was shut down here because this happened. This is the one I just spoke about, where it bought here, and I was like, no, you're buying too high, but it kept going. But I mean, there has to be a way. We have to have rules, you know. And I mean, I don't want it to buy here because we're at the end of a price inefficiency, and so it's highly likely the price dips down, rebalances, and then continues. But it didn't. It kept wriggling higher. And here we had a couple of losses. Let's have a look at those. Buy, where's that? Okay, so this is, it bought here, and prices are just bought too early. Prices went down, stopped it out. We had another one here on the pound American dollar, probably a very, very similar situation as this. Yeah, where it sold here, prices went down a little into profit, and then it left. Okay, so it's doing this a lot. Then we had this one, CAD franc, which I closed out for break even because I didn't like it. Where is that one? Where is that popping up? Yeah, so it bought it right here. And I thought that was a really poor place. And you can see the pattern. The pattern was here, the close of this candle, the slippage, sorry, the spread brought our entry up to here, and it went up and it started to come down. But that one would still be open, hadn't I touched it. But I just didn't like that. I didn't like that at all. Then we have this one here, which is the pound American dollar. And this is that one where it bought a little bit earlier. It bought here. Sorry. Sold here. Here. Sorry, this one here. It sold here and it went down there. So this is a pattern. Prices jetted away. It opened and prices wriggled lower from here. Okay, and then here's another one here. Dollar Japanese yen. I close this one out at a loss. I gotta find out, where was that? Here. So it sold here, and that wasn't a very good idea. But here's the pattern, and so we do. Okay, before I continue, let's keep going. We had this one here, which I closed out, which was a beautiful trade. I remember this one. Okay, let's have a look. Here we're bought here, and I got out at a break even, and it went up right to the target. Right to the target, and then started to drift. We had this one here, another one, pound yen. It bought here, so this is one I closed out early. Bought here, went here, and then it shot up. Had another one here. This is another one. We had here. This is a Kiwi Singapore dollar. Or bought here. See, just on the completion of this one here. Bought here. Price is kind of sat, and it snapped up. Okay, this happens a lot. And so ideally, I don't screw around with it. Okay, so what we could do, if we go to a different chart, where we have the histogram, what we could do is we could try and do a few different things where, for example, we're only buying when we have a positive histogram. But the reason I'm not fond of that is because we would start buying here, right here, and then typically this is where the end of these cycles occur. So right, this whole time we wouldn't be buying, which is a shame because maybe there's a pattern down here. See this one here, we wouldn't have gotten. It would have bought here. We wouldn't have gotten that because it was still negative. So I don't think you want to be in that. I don't want to enable that. I haven't have it enabled at least. So it's really difficult to understand. But from what I have observed, it's best to let it open these trades and then keep an eye on them. I've been managing most of these on my telephone if I'm out, and it's going pretty good. I spoke to a guy from, where was he? A Portuguese guy. I had a call with when we were on holiday. He was a mutual friend of a close friend of mine, and he was one of the leading AI guys in Portugal. And he told me, after a lot of practice, a lot of study and trading, that he concluded that 100% automated solution is very, very difficult, but a combination of automation and manual intervention, potentially closing out trades, seem to be a very reliable strategy. So that was his takeaway. That's my takeaway, and so I think maybe this would be just a really good thing to focus on, because I think this is going to essentially allow us to kind of apply what we know about the algo and about what we can see on a price chart and act accordingly. So anyway, these are my thoughts for the time being, but if you guys could help, that would be really, really cool. But I'm gonna shut this down for now, but please give me feedback. I'd be thrilled to hear from you. Thank you.